With way over 5,000 people in my Discord at copyandwin.com, you've probably taken a look to see for yourself. We beat the stock market every day, every week, every month. It's fair to say that we win a whole lot. And the way we do that is by not taking big risks and hitting strong profits almost immediately. It's rare that our trades don't immediately go green, meaning profitable, within minutes after taking them, but certainly almost all of them the same day within hours, and rarely it'll take a few days. But our win rate is over 90%. Yeah, 9 out of 10 are winners. I'm very proud of that. And if you peeked in our Discord, because after all, you can look at all of our trades every day for free, you'll see that we use the term runner or dangler quite a bit. And let's explain what that is, because it's a vital part of squeezing that very last little bit of huge profits out of our safe trades. Suppose you have 100 shares of a stock and it's gone up $1. It was a $5 stock and now it's up to $6. You've made $1 times those 100 shares, so you're up $100 on your $500 investment, right? Because you bought 100 shares at $5 each. That's a 20% gain. That's phenomenal. And maybe that happened in 1 day, 2 days, 2 weeks. Who knows? But for purposes of our example, you're up 20%. And your $5 stock, it's now worth $6. So at what point do you take a profit? At what point do you just get out, call it a day, and call it a big win? Well, here's what we do at copyandwin.com. I preach scaling out. I preach having runners. So as we get profitable and as we start to worry about if the trade comes back down using a stop loss to make our money, I always advise that out of those 100 shares, you might leave 5 on the table. So suppose you had a trailing stop and you're up $1 per share and it comes back down and now you're only up 80 cents. Because you had a trailing stop, follow it up, your trade would automatically trigger a sell at whatever trailing stop you set. So for this example, let's say we set a 20-cent trailing stop. Our $5 stock went up to $6, and then it came back down 20 cents to $5.80. And you had a trailing stop that said automatically, if that happens, with a 20-cent trailing stop, sell, take a profit. Okay, great. So you've made 80 cents on your $5 stock. That's a huge win, my friends, because we do that every day. But instead of selling all of them, what I preach, what I do, and you can see this in our Discord, look for yourself. What I recommend, don't sell all of your shares. So for example, if you had 100 shares, depending on how big your profits are, only sell 80 or 90. Leave a few shares just in case after dipping, the stock goes to the moon. Because that way you get to feel like you've realize the upside and make more money without risking becoming a loser. And on those danglers, those runners that you leave behind, well, maybe you set a trailing stop much bigger, maybe back down all the way to break even. So your $5 stock went up to $6. You sold most of your shares when it came back down to $5.80, but you left a few just in case it keeps going up. Make sense? And so what if those lose? Because you made huge money on those 80 or 90 shares that you sold. So even if the rest, your danglers, your runners, even if they come all the way back down to break even, meaning the $5 you paid, you didn't lose money on those, but you made money on all the rest. And by giving them room to do this along the way as they climb back up, well, you've still got skin in the game. I hope that makes sense. What I'm saying is always leave runners, always leave danglers if you feel that trade has room to run. Of course, there's never anything wrong with taking a profit, and that's what we do every day at copyandwin.com. Love you.